We're here live in Dallas co-hosting the Deal Economy with The Deal, one of their new conferences and great successes here in Dallas. Want to talk about some of the key themes we're seeing here today, and really pleased to be joined by Jim Peko, Jason Pizza, Eric Burgess, and let's talk about some of the key takeaways. A lot of great insights here today. Jim, what do you think?
Yeah, absolutely. I think, now more than ever, with valuations at all-time highs and competition for deals fierce, the marrying up of technology and human intelligence is extremely important to find value-added insights, particularly related to the use of data analytics to really drive deal value. It becomes a very simple equation. If I can save you $1 million in EBITDA and deals are at 10 times, I've created $10 million in enterprise value, and that's a compelling value proposition for our clients.
Absolutely. Jim and I just had the pleasure of hosting or being on a panel, I guess, really talking about the use of technologies to gain competitive advantage in M&A. And I definitely think increasing the speed and the accuracy of all of the data that's being analyzed today is going to help companies gain competitive advantage. Jason, you were on a great panel today. Tell us about it.
Sure. So I was leading the panel basically discussing carve-outs in the marketplace and discussing kind of what the current state is, future state, as well as like any type of pitfalls and things that companies need to be concerned about. I would say that from that, based on the questions that were coming in, as well as some discussions that we've had with some of the attendees here, there is a lot of interest in terms of how companies can get set up for potential divestitures, what they need to look at, as well as all of the work that kind of goes behind the scenes and then up front when they're going through that process, both pre and post divestiture. And I think that helps us a lot, right, because we have a lot of the insight and the knowledge that can really help these clients out down the line. And I think that what this was able to do was bring to the forefront that we actually do assist with that, and that it is a needed service for a lot of our clients.
Absolutely, Jason. Thank you. And Eric, so you have been interacting with many great business leaders here today. What are your thoughts on some of the panels? They've covered everything from innovation and technology to the trends in M&A today. What are your insights?
Yeah, definitely. No, it's been great talking to everyone here. It's been a great group out there, mixed between corporate buyers and private equity buyers, and it's really been great to kind of see what they're looking at and what they're concerned with. It's the changing markets. It's multiples getting much higher than they used to be, and how do they go and get a deal done and get a deal done correctly? So what's exciting for me and where I sit is really kind of being on top of that innovation and really getting out there and driving what a deal is going to look like from a diligence perspective going forward. Getting out ahead of the artificial intelligence, getting ahead of everything when it comes to really getting in there and doing data analytics and driving it on the data versus just confirming what a number is. So we're really excited that we're already getting ahead of that and getting that to market and can be at the forefront of it. So we're just really excited to be in a place where we can help our clients out and really solve the needs that they're voicing as we talk to them today.
I think that's exactly right. And I think just based on the feedback we were receiving, many companies are early on in their evaluation of how to leverage technology in the process. So I think a great opportunity, to really help them through that kind of transformation. So what about, there were some topics around the economic uncertainty and potential downturn and the timing, and also balancing that with the hot market that we have been in for some period of time. Anybody want to share insights on that, some of the key themes that we've talked about here?
Well, one thing that I'm somewhat convinced of, and I'm not going to prognosticate around where interest rates are going to go, but I think we are in a low interest rate environment for many different reasons. I think that there could be a tick up in interest rates, but I don't think it's going to be a dramatic tick up in interest rates. I don't think we're going to get to a 6 or 7% level on the long bond. And I think because you have those lower, relatively speaking, interest rates, it is going to underpin, economic growth. Mm-hmm. And so while I think there are a lot of worries in the market, and there should be, when and if that recession happens is really difficult to assess because we've been waiting for it for years now.
Right.
And it hasn't happened. Corporate profits, or the growth of corporate profits is slowing, but they are still growing. So it'll be interesting to see how that filters out. And there is plenty of liquidity in the markets to drive investment into growth. And so unless there's a black swan event, I think that you're going to continue to see M&A activity, maybe not at all-time highs. Companies are going to reach for growth by adding on, by doing add-ons. And it'll be really interesting to see how they can drive further value once they bring those add-ons in and integrate them. Because I think the name of the game with valuations where they are is how quick can I integrate an acquisition and realize the synergies, because that's money right there.
Yeah.
So I think those are really critical, things to look at going forward.
Yeah. Great points, Jim. Jason, Eric.
Yeah, no, I completely agree, and I think it was mentioned quite a few times on the panels of we can't just out of fear stop doing deals because we think that it's going to come to an end at some point. We have to be paying attention to the fundamentals of not only our economy but the businesses that we're looking at. And I think of the hundreds of businesses that I've looked at over the last couple of years. One trend that I continue to see is sound fundamentals of the companies. When we start to see that pull back, I would agree that's when we need to start worrying a little bit more. But as of right now, I'm not seeing that in the deals that I'm looking at, both on the buy side and the sell side. But I think even more importantly, as Jim mentioned, is that M&A life cycle of really making sure that we're truly not only getting a deal done, but then driving it and getting it integrated and reaching those synergies right away. So it's coming forward with kind of that whole package of getting in there, doing the diligence, but having an integration team and a process improvement and really driving that post-integration as well. Because if you don't meet those synergies or that goals, you're never going to see that full value of the company.
Yeah. And on top of that, I think, both of these brought up the good point, right? A big thing about this is really it's the fear of the unknown at the end of the day right now. But as Jim alluded to as well, it's a slow-moving progression right now, right? So to think that any of that's going to die up dramatically, I don't think that's even in the realm of possibility, at least not the way that the historical trends are showing at this point in time. Not to mention that even in a recession, there's still a lot of deal movement, right? But in just different fashions. There's companies that are still going to have to kind of project and get themselves together from a liquidity basis and try and move forward from there. And in the interim, right now, they still have time to kind of make their moves, and they can digest and try and understand where they want to be, not only tomorrow, but 3-5 years down the line, assuming any type of issues that may come up.
And what we're also seeing is that there's been a bit more capital raising, if you will, on the PE side for distressed funds. So, PEs are beginning to gear up if there's an eventual downturn to buy companies into distressed funds. So I think that there will continue to be activity.
And maybe shifting gears a little bit, so the integration, I'll build on your points here, Eric. The integration and the process improvement and everything as we look forward in the 3 to 5 years. I certainly think, and while we all covered technology and innovation in many of our topics, with any of these acquisitions, it really is about what is that transformation plan that is in place in any of these functional areas. And so understanding the finance team's transformation plan and how are they going to leverage these process improvements and these new technologies, that's certainly going to drive up ROI in any of these organizations. But baseline is, what is that transformation plan? So let's see it for finance. Let's see it for the sales team, the customer experience. How are we leveraging all of this to bring even more value through that customer? So all towards driving up ROI, but I think as we look out over that next 3-year plan, that'll be really significant. What do you think?
I think that's the key driver. And as we said, with those multiples being at their highest, you've got to make sure that you do all of those things correctly to really see the value in those companies. Because if you hold off, I think a lot of times everything's pointed out in diligence, and you're running to close, and you're getting ready for all those things, and then there's the celebration that we got this deal closed. What's next? Too many companies, when they do that, don't set that 100-day plan and don't live out to that 100-day plan to really realize those and see those synergies and see those values really come through early. Because if you don't do it early, you're not going to see them in that 3 to 5 year period. You might, but it might be towards the tail end. And if you're wanting to exit a company at 4 to 5 years, but you haven't reached, a couple of years of those synergies, you're not going to get the full value, because a potential buyer at that point might not believe that they're really sustainable into the future. So the quicker you can do it, the quicker you can realize those values, not only for that 3 to 5 year period, but I've even had companies that, that I was a part of the buy side on, that I've subsequently been on the sell side on in under 2 years, 2 to 3 years, because they're seeing those synergies so quickly. We're in a frothy market, so they were able to truly, capitalize that on a very quick period. So they might have thought it was a 3 to 5 year period hold, but they've been able to turn that into a 2 and 3 year period and get the returns that they were looking at much quicker.
And to add on what Eric is saying, we recently worked on a transaction where we had a TSA on a large carve-out for a financial institution. Mm-hmm. And within the TSA, there were 150 applications that would eventually transfer over, but were within the confines of the TSA. We completed a program where we were able to transfer 50 of those applications of the 150 before the deadline. And that is how you can drive a lot of value, because as we heard this morning on one of the panels, the TSAs take up management time, and there is a cost to it. And when you can bring that in-house or outsource it in the right way, you can save a lot of money. And it's a very important issue, because what we're seeing is that a majority of the deals that are in the market, and I don't know exact percentages, are carve-outs or add-ons. And so there tends to be TSAs attached to them.
Excellent. Jason, do you want to tie into that?
No, I mean, I agree. And
Yes.
he's absolutely correct. The majority of the activity that we're seeing right now is absolutely carve-outs. There's too many of them out there for us to even venture to see at this point in time. And I think that's going to continue, to be honest with you. So with that continuing and that trend, and then Eric's point to companies that are even being able to turn value into these, smaller monetized group of assets, in a quicker amount of period, it's just going to keep going and going and going.
Well, we are going to head back into the deal economy so that we don't miss all of these great panels. But parting advice for those who are active in the deal market today, what would you say? Key advice, 1 to 2 points.
1 to 2 points. I mean, I think the biggest thing right now is, make sure that you're, buying the assets in the companies that you think you are. Really do your full diligence across, all aspects of the company. And number 2, as I said earlier, is immediately get those integration plans in. Immediately, put all of your plans in place so that you can, get the value that you're looking for right away.
I would say continue to drive strong leadership within the organization. Being able to prepare for any type of either acquisition or divestiture that you may do at a later date, so that all goes through at a proper pace and an efficient manner. Don't get scared off by the markets at this point in time. They're moving the way they're going to move, and they'll dictate what you should and should not do, and keep driving value.
Excellent.
And I think those are all fantastic points, and I'd just close out on saying, don't be afraid of using technology, and really look for those hidden opportunities to drive value. And that's going down, below the typical, financial statement analysis, and really looking at transactional data, as well as GL level data, to really drive additional value.
I agree on that, Jim, and I might build on that very point, that just if you are using human intelligence solely for the monitoring of your portfolio of targets, I really think you have a huge opportunity to leverage technology, leverage AI, leverage machine learning. It is not cost intensive today to really build those sorts of platforms, and to use technology to scan and monitor updates to your targets 24/7, so that your human intelligence can focus on the insights and the analysis. But it's been a great conference. Congratulations to the deal on their new venture into Dallas. It's been terrific to team with you, and we'll look forward to joining the rest of the conference.
Excellent.
Thank you.
Thank you.
Thank you.
I'm Nichole Jordan. To learn how Grant Thornton can partner with you to strengthen corporate governance, leadership, diversity and culture, customer focus, and technology and innovation within your business, please subscribe to my YouTube channel. Thanks for watching.